Welcome to today's Explainer. We're diving straight into one of the most urgent and honestly fascinating setups we've seen in the Asian markets in a while. We've got a massive structural bifurcation today, and it's going to directly dictate how tonight's US trading session plays out. I mean, we're talking independent industrial and macro shocks hitting at the exact same time, literally fracturing the Korean market. So stick around because we're going to unpack exactly what this means for US semiconductor equipment giants like Applied Materials and Lam Research. Just look at this striking visual contrast. Over on the left, that KOSPI heat map is just a sea of intense red. We're talking a massive, concentrated sell-off in the large cap space. But then on the right, represented by those SK Hynix HBM3E chips, it's like a completely different universe. The semiconductor equipment sector on the KOSDAQ is on an absolute tear. You know, it's incredibly rare to see a market split this aggressively during the exact same session. To put the sheer depth of that split into perspective, check this out. The broader KOSI composite index totally collapsed, closing down 1.84%. But right next door, the KOSDAQ actually surged, closing up 2.31%. Now, this isn't your normal everyday daily volatility. Nope, this is the result of massive, entirely independent inputs acting on the market simultaneously. We really have to separate the signal from all the noise to figure out what's actually going on here. So let's get right into Section 1, the supply chain catalyst, and that massive semiconductor surge. I mean, the gains today were just off the charts. Jusung Engineering rocketed up 27.22%. And hey, they weren't the only ones throwing a party. Wonik IPS advanced nearly 30%. And we actually saw a total of 8 semiconductor equipment names close near their limit up today. When a sector moves with this kind of coordinated, aggressive upside, you know for sure there's a primary industrial driver pulling the strings. So what was that driver? Well, right before the Korean market opened, SK Hynix dropped a massive fundamental anchor. They announced a plan to literally double their wafer production capacity within the next 5 years. This wasn't just some vague corporate goal. It instantly gave semiconductor equipment suppliers direct forward order visibility. Think about it. When a massive front-end customer like SK Hynix commits to that kind of capacity expansion, it translates immediately into confirmed equipment orders. Boom. And that built into an absolute perfect storm. We had the SK Hynix supply signal driving fundamental demand. But then, right in the morning session, the Financial Services Commission stepped in, convening a KOSDAQ policy activation discussion. This policy signal was basically pouring gasoline on the fire. It combined with the supply catalyst, and suddenly institutional buying expanded way beyond just the equipment makers, flooding across the broader KOSDAQ. By the bell, institutions had net bought 206.8 billion won on the KOSDAQ. All right, shifting gears a bit to Section 2, macro noise and geopolitics. Because on the other side of things, the damage was incredibly concentrated. LG Electronics plummeted over 16%, SK Telecom fell 13%, and Samsung SDS dropped nearly 11%. Ouch, right? What happened? Well, the Broadcom Q2 conference call wrapped up just hours before the Asian Open. The results and guidance seriously disappointed the market, sparking intense, heavily concentrated profit-taking in the IT large caps. And that specific tech sell-off, it acted like a massive anchor dragging down the KOSPI. But Broadcom wasn't the only headache. We also had severe macro and geopolitical headwinds slamming the market. U.S. forces struck Iran's Keshem Island radar facility, which instantly spiked energy markets. WTI crude jumped 2.41%, hitting an intraday high of $96.02. This geopolitical escalation, paired with some really strong U.S. economic data, pushed the odds of a Fed rate hike in December up to 41.5%. All of this created a massive Asia-wide risk-off environment, driving yields higher and actually pushing the U.S. dollar to Korean won exchange rate past 15.30 intraday, something we haven't seen since the financial crisis. Let's peek under the hood in Section 3, hidden foreign capital flows. So on the surface, the data is screaming risk off. Foreign investors net sold a staggering 6.99 trillion won in the spot market. But wait, look a little closer. At the exact same time, they actually net bought 686.7 billion won in futures. Now, if this were pure panic mode, they'd be dumping futures too, right? The fact that they're buying futures means they are maintaining their directional exposure to the Korean market. And that short sale ratio hitting a 5-session high of 78.16%, that just confirms downside positioning on individual names is running parallel to, not replacing their overall equity exposure. Here's the really crucial point though. We always have to look for hidden weaknesses. Even though the KOSDIQ closed up 2.31%, the actual market breadth paints a totally different picture. Get this. Declining names, 849 of them, actually outnumbered the 834 advancing names. This proves that the rallying was incredibly narrow. It was entirely propped up by semiconductor equipment leadership pulling the index up, rather than broad, healthy participation across the market. And let me tell you, that kind of narrow leadership creates insane internal market stress. Look at Jusung Engineering with 353.4 billion won in short interest, and Hami Semiconductor, over on the KOSPI with a mind-blowing 1.99 trillion won short position. The traders caught holding those short positions marked some incredibly painful losses today. And that generates extreme short squeeze pressure that's going to carry directly into the next trading session. Moving right along to Section 4, Loro's Key Market Insights. To really lock in the golden rule for today's explainer, let's bring in our visual anchor, Loro. As you can see right here in this animation, Loro brilliantly illustrates our core insight. When an index falls while a sector surges simultaneously, those two moves reflect entirely independent inputs. You absolutely have to evaluate the sector signal, in this case, the semiconductor supply chain, separately from the broader macro noise and index collapse. They are simply not the same trade. Loro leaves us with 3 structural markers to always keep in mind. First, look for an industrial supply trigger, like our SK Hynix news, to validate a sector's strength. Second, realize that when market breadth diverges from the index direction, you're dealing with narrow, fragile leadership. And third, when you spot massive spot selling right alongside futures buying, the big money isn't actually fleeing, they're just shifting their directional exposure. Finding these markers confirms the conditional validity for our US market setup tonight. Which brings us to our final section, Section 5, US Session Validation Watch List. Okay, treat this like a strict unbreakable rule. Our validation line is exactly 30,299 on the NASDAQ 100 futures. If the NASDAQ holds above 30,299, it means the semiconductor equipment upside setup, our linkage to the Asian data, is totally valid. But if it breaks below 30,299, that means the downside pressure from the Broadcom disappointment has taken over as the dominant active force in the market. So here's your quick step-by-step checklist tonight. Step 1, verify that 30,299 level to see if U.S. equipment stocks like Applied Materials and Lam Research actually link up to the Asian surge. Step 2, monitor U.S. initial jobless claims. Consensus is at 215,000. If claims come in higher, it signals a weaker labor market, rate hike expectations cool off, and our semiconductor setup strengthens. But if claims are lower, rate fears are going to spike, and the setup breaks. Finally, Step 3, keep a close eye on WTI crude. We need to see if those U.S.-Iran geopolitical tensions escalate and drive a risk-off mood, or if they start to cool down. Now, until that U.S. data actually drops, the overall direction is just unresolved. The VIX is currently sitting at 16.43, up slightly by 2.3%. What that tells us is that volatility is sustaining this environment of uncertainty, but we haven't fully crossed over into full-blown panic territory yet. Basically, the market is just holding its breath. So, I'm going to leave you with this final provocative thought. Will the U.S. market confirm the absolutely undeniable semiconductor supply signal we saw in Asia today, or will it just surrender to the geopolitical and macro noise? Watch those validation levels closely tonight. If you would like to receive news on the closing of Asian stock markets before the New York stock market opens, please subscribe.